Christian Kulamagi sits in a dark room in Sweden at 2 a.m., watching chart replays for the fourth hour straight. Not because he's obsessed with making money, because he's obsessed with not reacting when money is on the line. While other traders are buying courses and joining Discord servers, he's rewiring his nervous system to stay calm when British pound drops 50 pips against him. Most traders think they need better setups. Christian knew he needed a better brain. He spent 3 years training his psychological responses before he ever risked serious money, turning chart analysis into meditation and position sizing into emotional insurance. The result? A trading system so psychologically bulletproof that it scaled from $5,000 to millions without a single account blowup. But what he discovered about rewiring the human brain for trading will completely change how you think about every trade you take.
The neural rewiring protocol. Your brain's default wiring will destroy your trading account. Every human comes programmed with fight-or-flight responses that served us for thousands of years, but now sabotage every trade we take. When your euro-dollar position moves against you, your amygdala triggers the same stress response your ancestors felt facing predators. Your heart rate spikes, decision-making deteriorates, and you either freeze or panic sell at the worst possible moment. Christian understood this biological reality and spent years deliberately reprogramming his stress responses through systematic exposure therapy disguised as chart study. The rewiring process starts with understanding that your emotional reactions to price movement are learned behaviors, not permanent features. Every time you flinch at a red candle, panic during a breakout, or freeze when your stop gets hit, you're reinforcing neural pathways that will repeat that same response. Christian broke this cycle by watching thousands of historical price movements in replay mode, training his brain to see volatility as normal market behavior rather than personal threats. He practiced staying calm during simulated drawdowns until his nervous system stopped interpreting paper losses as survival emergencies. Most traders try to control their emotions through willpower, which is like trying to stop a freight train with your bare hands. Christian took a different approach. He systematically desensitized himself to the specific triggers that cause trading mistakes. Gaps against his position, fast moves that trigger stops, winning trades that suddenly reverse. He exposed himself to these scenarios repeatedly in replay sessions until they became emotionally neutral events. This wasn't just studying charts, it was cognitive behavioral therapy using market data as the therapeutic tool. The breakthrough came when Christian realized that confidence isn't about being right more often. It's about being unshakable when you're wrong. He trained his brain to view losses as valuable data rather than personal failures. Every stopped-out trade became information about market structure rather than evidence of his inadequacy. This psychological shift transformed his relationship with risk from emotional torture into mechanical process. His stops became protective insurance rather than admissions of failure. The neural rewiring extends beyond individual trades to long-term thinking patterns. Christian programmed his mind to think improbabilities rather than certainties, expectation rather than prediction. He understood that trying to be right about individual trades creates psychological pressure that destroys decision-making. Instead, he focused on being systematically profitable over hundreds of trades. This mental framework allowed him to cut losses quickly without ego damage and hold winners without fear of giving back profits. But rewiring your stress responses is only half the battle. The real edge comes from what most traders never develop.
Position sizing system. Position sizing isn't about math. It's about emotional regulation. Christian discovered that the right position size isn't determined by your account balance or the technical setup. It's determined by the largest loss you can take without your nervous system hijacking your decision-making process. If you're risking money that makes your hands shake when you click buy, you're already defeated before the market even moves. Every successful trader learns this lesson eventually, but most learn it after blowing up multiple accounts rather than before. The psychological position sizing formula is brutally simple, but almost no one follows it. Risk only the amount that allows you to sleep peacefully if the trade goes to zero overnight, not the amount you can afford to lose mathematically. the amount you can lose without changing your behavior on the next trade. For most people starting out, this means risking far less than traditional risk management rules suggest. Christian often started new strategies risking just 0.25% per trade until his confidence and competence aligned with larger size. Size affects your brain chemistry in ways that most traders never consider. When you risk too much, your body floods with stress hormones that literally impair cognitive function. Your working memory decreases. Your ability to process complex information deteriorates. Time perception warps. You make decisions from a biologically compromised state that has nothing to do with market analysis and everything to do with survival instincts. Christian sized his positions to keep his brain in optimal decision-making mode rather than fight-or-flight panic. The scaling system becomes a psychological tool for building confidence through confirmation rather than hope. Instead of going all in on the first entry and praying it works, Christian starts with tiny size that lets him think clearly. If the trade confirms his thesis by holding key levels or showing institutional buying, he adds more. If it proves him wrong by breaking structure, he cuts the small loss without emotional damage. This approach transforms trading from gambling on predictions into responding to market information. Most traders size positions based on how confident they feel about the setup, which is exactly backwards. Confidence has zero correlation with actual outcomes, but it has massive correlation with emotional attachment to being right. Christian sizes every trade the same way regardless of his confidence level because he understands that his ability to predict individual outcomes is essentially random. What's not random is his ability to manage risk consistently and let probability work in his favor over time. Once you master this psychological approach to position sizing, you unlock something even more powerful.
Emotional detachment system. The most dangerous moment in trading isn't when you're losing money. It's when you're winning and your ego starts whispering that you're finally special. Christian learned that sustainable profitability requires complete emotional detachment from individual trade outcomes. Not because emotions are bad, but because attachment to being right destroys the systematic thinking that creates long-term edge. When you need your next trade to work, you've already lost the psychological game that determines your success. Emotional detachment starts with understanding that your trading results have nothing to do with your worth as a person. Every trade is simply data collection about market probabilities. When Christian enters a position, he's not betting on his ability to predict the future. He's betting on his system's ability to profit from uncertainty over many iterations. This mental framework removes the psychological pressure that causes traders to override their rules when individual trades don't work out as expected. The detachment system requires building what psychologists call outcome independence. Christian measures his success by how well he follows his process, not by how much money he makes on individual trades. A perfectly executed losing trade is more valuable than a sloppy winning trade because the losing trade reinforces correct behavior while the sloppy winner reinforces bad habits. This inverted thinking pattern is what allows professional traders to stay disciplined during both winning and losing streaks. Most traders celebrate wins and mourn losses, which creates an emotional roller coaster that eventually destroys their decision-making. Christian trained himself to feel the same way about all closed trades regardless of outcome. Relief that he followed his plan, curiosity about what the market taught him, anticipation for the next setup, but never joy from wins or pain from losses, because both emotions interfere with systematic execution. This emotional flatness isn't depression, it's professional detachment. The compound effect of emotional detachment is that your trading results stop affecting your trading decisions. When you're not trying to make up for yesterday's loss or protect today's gain, you can evaluate each new setup with fresh eyes. Your position sizing stays consistent, your entry criteria don't drift, your exit discipline doesn't weaken. The system starts to breathe and flow naturally because you're not constantly interfering with it based on recent emotional experiences. Comment below and tell me which psychological shift you need to make first: neural rewiring, position sizing, or emotional detachment. Because the trading education industry teaches you everything except how to think like a machine while feeling like a human. Master these 3 psychological pillars, and trading transforms from an emotional battlefield into a systematic business, where your biggest edge isn't predicting the market, it's controlling yourself. Ignore them and you'll keep funding accounts for traders who've learned that the real competition isn't against the market, it's against your own psychological weaknesses.